As a trader, we all just want to press that buy or sell button. We want to get in, we want to make money. But sometimes the best trade is no trade. If instead you change your perception and start focusing on not taking losing trades, you will make more profit. It's all about baby steps. Learn to crawl before you can walk, before you can run. I started to try different ideas to make things feel real, so the market couldn't warp my sense of perception or my sense of reality anymore. And I want to share some of those ideas with you today because I believe that if you do this, it will help your trading. Hello everyone, welcome back to a new video. Today I want to talk about perspective in trading and how it helped me become a successful trader. And I believe by the end of this video, the things I talk about will help you become more successful with your trading. Would you believe me if I said a simple perspective shift could equal success? Sounds a bit far-fetched maybe, that something, just changing your perspective can make you successful, but believe me, it really can. Honestly, at the very beginning of my trading career, I was going through the mistakes of having lots of losses, but then I was starting to get profitable, but then would have those losses again, silly losses. Then I started being more profitable, actually having 2 or 3 good profitable weeks, or even 2 or 3 good months. And then somehow I'd blow an account, have big losses and end up back at square one again. And I think, how the hell have I got here after all the hard work? And a lot of it comes down to perspective. And what I want to talk about perspective today is a whole broad range of scenarios. I want to talk about the perspective of the market as a whole and how a lot of retail traders view the market and actually fail to see it in the right way, down to the nitty-gritty of the profit and loss each day. There's a lot of things to unpack and uncover when it comes to perspective. And it's not something that I actually see spoken about much. People talk about psychology, which is, as we talk about, 80-90% of trading, and how to be a successful trader is by having the right psychology. But not many people talk about perspective, and perspective really is key to being successful. What I want to start off with today is, like I said, the perspective of the market on a broader view. Let's step back off the charts a little bit. And the reason why I want to start with this is because currently we're in a situation where the US dollar has been ranging for almost 8 weeks, but more of a tighter range for the past 4 to 5 weeks. The price isn't really moving without 5 doji weekly candles, and it's just consolidating and moving sideways. And I've been getting a lot of messages on Instagram asking what's going on with the market. From the public, just sending me messages saying they're struggling with their trading, what's going on in the market, why is the US dollar not moving? And again, this is where I think perspective really comes in to the problem with a lot of retail traders. So firstly, let's just think. This is the foreign exchange market. It's a widely traded market around the world. There's a lot of volatility in the market, but at times there's not. And as I said, I want to step back out from a day-to-day perspective in trading. Let's think about a year, over 12 months. And I say this to members a lot as well. You have to think about your year. Think that you're in January. Have this perspective. Think that you're in January right now and you've got the whole year of trading ahead. You need to have the perspective that not every trading week or even every trading month is going to be a good month. But a lot of retail traders lose sight of that. And they're only looking at the next day, the next trading day, or the next trading session even, or the next, end of the next session, when's the next session, or the next day, but going into the next day, or the next week, and month to month. And they're just sort of rolling from day to day and not really stepping back and having a proper perspective on the market. Now, go back to imagining you're in January. You've got 12 months of trading for the year. You need to have the perspective that not every day is going to be a trading day, not every week, and sometimes not every trading month. Now, if I say to you some months are not trading months, you probably think I'm crazy because you think, what are you going to do for a month? Just not trade? I know that's very hard, and it's very rare that you will have a complete month of no trading, but it can happen. And that's the perspective that you need to have. Most retail traders would not even, let it enter their mind that potentially there might not be a trading month, let alone a trading week or a trading day. A lot of retail traders just think that every day is a trading day, that you should be able to sit down in front of your chart every London session or every US session and just expect a trade or a setup to appear and to play out. But that is not the case. So again, think about it on a yearly basis. Do you think that every single day of every single week of every single month throughout the year is going to be a day that you can trade? No. There's also what you need to realize is that through a course of a year, on a monthly basis, do you think that you're going to have a winning month every single month? No, you're not, because it's impossible to be 100% right 100% of the time. No one has 100% strike rate. No one has 100% strike rate in trading. No one wins 100% of the time. No one has 100% winning months, month on. And retail traders just think that that should be, that you should be able to trade every day. You should be able to trade every week and every month. And no matter how good your strategy is, that's not the case. You can have the best strategy out there. Doesn't matter what the strategy is. You can have the best strategy, 90% win rate. You're still going to have 10% loss. So then if you put that on a monthly basis, out of 10 months, you might have 9 winning months, but you're going to have 1 losing month. And retail traders have the wrong perspective of the market where they expect to be able to trade all of the time. And I want to talk about this on the broader scale, and we're going to get into a lot more a little bit later in the video, but I just want to talk about this on a broader scale first, because we are going through a period where the US dollar has been ranging for 4 to 5 weeks. Now, for myself, there hasn't been as many trades. There's been a few trades, a few high reward trades, such as 8 or 10%, but there've been only 1 or 2 of those. There hasn't been that many trades. There's been less volatility, so there hasn't been as many trades, but I'm okay with that because I know that once the market is done with this consolidation phase, through experience and history of being in the market, I know that that's when the real party starts. When this consolidation phase is over, it can last 1 week, 2 weeks, a month, or even 2 months. We're almost 2 months in a range with the US dollar. But once that breaks, then the party starts. But what happens with retail traders is they get caught out in those consolidating weeks or months, and then they're not there when the party starts because they've been taken out by the market, they've blown their accounts, they've been accumulated by the market with all the ranging price action and false moves. And then when it's time for the market to get going, you're no longer there. You're not able to take these moves or participate because usually retail traders have blown their accounts by then or lost a lot of money by then. Your psychology is ruined and you're basically exhausted from the market, having just had you in turmoil for weeks or months at a time. So going back to the 12 months, what you have to do is understand that with trading the Forex market, you're not going to be able to trade every single day, every single week, or every single month. As I said, every single month doesn't really happen that often, but certainly you need to be aware that not every day is a trading day and not every week is a trading week. And when you start to realize that and have that perception on the market, that's why I've started there is sort of the foundation of what we're going to talk about today. Because if you have that as an understanding, that not every day is going to be a trading day, I guarantee you that you'll actually improve your trading straight away. Because if you can get up each morning, whether you trade from work or you trade at home now, and this is a problem that a lot of retail traders have, they actually get good enough at trading and then they start trading from home. Then they start sitting in front of the chart and they get caught up by the charts, and the market pulls you in. I'm going to talk about this later, but the market pulls you in and somehow, like I said at the start of the video, just gets you to a place where you think, how have I got back to this point where I've had a row of losses or I've blown an account? Because the market specializes in just reeling you in and reeling you in, especially in the consolidating weeks and months like I've just spoke about. But if you understand that every day isn't a trading day, or every week isn't a trading week, straight away from the very beginning of your trading week or day, you understand that today may not be a day that there is a trade. How simple does that sound? Many of you may know this, many of you may not, but there are not setups every single day. And if you've got a strategy and a good strategy, They're very rarely going to be setups every single day that match. You have to be patient and you have to wait. But if you understand this broad perspective on the market and learn that not every day is a trading day and not every week is a trading week, then when you're approaching the market every day or week, you know straight away, okay, I'm not going to trade today. There's a possibility I might not trade today, or there's a possibility I might not trade this week. Again, that's very hard for a lot of retail traders to even comprehend, and to even, not even comprehend, but even to just accept, because as a trader, we all just want to press that buy or sell button. We want to get in, we want to make money. But something that's very, very important, and I always stick by, is that sometimes the best trade is no trade. The best trade is no trade a lot of the time, to not be in on the wrong side of the market. If you can change your perspective shift equals success, as I said at the start of the video. If you can shift your perspective to understand that not every day should be traded or every week, and also that the best trade sometimes or very often is no trade, because that's going to stop you from losing and being on the wrong side of the market. So that's a little bit of a perspective shift on the broader range. But talking about my point of the best trade is being no trade, I also want to just talk about that and a perspective shift here. And this one is huge, I believe. And if you can get your head around this, it will change your trading. So let's think about your trading. What do you think is a successful week, a month, or a year, percentage-wise in your trading? Would you say that making 100% on your account in a year is good? Given that, you know, a normal hedge fund will give you 5 or 10%, etc. on your investments, you know, talk about 100% in a year is very, very good. You know, you're looking there at, you know, around 10% a month, which is very good. If you can make 10% a month, that's good money. That's good returns on a year. That's, you know, exceptionally good to some. Maybe some watching this might think that that's not that much, but let's just take it on average. Let's call it 100% in a year. Now, think about your trading. Again, everyone watching this will be at different levels. There'll be people who are really struggling, people who have maybe got over the hill, are profitable. But as I said at the start of the video, sometimes you're profitable for 2-3 weeks and you throw it all away because you don't have the right perception and stuff I'm going to talk about later. But let's talk about your trading, and let's be really honest here. How often do you take a trade that might be outside of your strategy or outside of your risk management, or a trade that you take, just you think, oh, I'll just chance it on this trade, or you know, you take a little bit of a risk, you know that trade is a bit of a gamble, and how often does that trade ends up losing more than you expected because you're outside of your risk parameters, you're outside your strategy, you end up holding on to it for too long, etc. But how often does that happen? You know, for the better traders watching, hopefully never, but for 95% of traders, it's always an issue. You're always watching the charts and, you know, you see an opportunity that doesn't quite fit your strategy, and then you think, you know what, F it, I'll jump in, I'll give it a go. And 9 times out of 10, that trade loses. Now, the perspective shift I want to add to this point is, let's just say you have that one slight of a gamble trade, that trade that's slightly outside of your risk management, or you know, doesn't quite meet your requirements, that you know deep down, if you look in the mirror or you look deep down when you're pressing that buy or sell button, you know that you should not be taking that trade. For a lot of retail traders, that's nearly every day or most sessions. But let's just say that you do that once a week. And I know for most people watching will be more than one a week. But again, let's just call it one a week. And let's just say that you only lose 1% of your account on that one trade. I'm being very conservative here. So let's just say once a week, you take a silly trade that you know you shouldn't take and you lose 1%. 1% loss a week is 4% a month. And then if you do that throughout the year, which most retail traders do, that's almost 50%. 50%. So see the perception here. If you're making 100% which most retail traders aren't, but even if you were, you're losing half of that due to just taking one unnecessary trade a week. Just one trade. So going back to what I was saying about no trade sometimes being the best trade, if you eliminate the silly trades that you're taking, and rather than always chasing the money or chasing the next winning trade, if instead you change your perception and start focusing on not taking losing trades, you will make more profit than actually looking for the profitable trades. Most retail traders, they sit down at the charts every day and they're just looking to trade, just looking for the next profitable trade. And that's the wrong mindset, that's the wrong perception to have, because it's not going to be there every day. That's why I'm laying the foundations with the perception. Not every day is a trading day, not every week is a trading week, and not every month is a trading month. But if you don't have that perception of the market, you're going to be a participant of the market every day. And then you're going to have unnecessary losses that you shouldn't be having. Whereas if you have the right perception that, okay, today might not be a trading day. So when you start your trading day, you are aware that you might not take a trade today, or you might not take a trade this week. Again, most people will find that very hard to actually do. Will find it very hard to actually not trade for a day or not trade for a week. But hopefully with this perception shift, I can help you. So if you think, rather than chasing the trade each day, if you now shift your perspective to, I don't need to trade, because if I don't take that silly trade, I can make more profit by not trading. See the perception shift there? By simply trading less, staying away from the bad trades. I know that's easy to say, but if you don't have the right perception and realizing how all of those losses mount up, because most retail traders, we don't want to think about the losing trades, sort of brush them under the market, don't want to think about them on to the next trade. But if you really think and shift your perception about your losses, don't sweep them under the carpet and just think, well, if I take one silly loss a week, that's 4% a month. Doesn't sound like much, does it? But again, go to the yearly basis. Over a course of a year, that's almost 50%. Most retail traders do not make 50% in a year, but you're losing 50%. But if you shift your perception on, rather than trying to take as many trades and trying to trade every day and trying to trade every week, then you can reduce those losses. And by just understanding that those losses amount up quite quickly over the course of a month and a year, hopefully now, next time you look at the market, you think, you know what? I'm not going to rush a trade. I don't want to lose 50% in a year. And that is a conservative figure. Remember, most people are losing way more than 1% a week on an unnecessary trade, and way more than 4% a month, and way more than 50% a year, because they're actually taking way more unnecessary trades, gambling way too much, and taking stupid trades in the market. In your mind, you need to shift your perception on the market, that sometimes the best trade is no trade. But now that I have actually spoken about, shifting your perspective on, hopefully shifting your perspective on trading and realizing that you don't need to trade every day. So not only is the market not available for you every day, because the market isn't set up like that. The market isn't available for you every day to have a trade. And the market isn't available for you to make money every day. So hopefully if I've shifted your perception on that already, and along with that, you're now understanding, actually, I shouldn't trade every day, because I am taking silly trades that I shouldn't be taking, that I know deep down does not fit my trading strategy or doesn't fit what you should be doing. You all know what you should be doing. You've got your own rules, you've got your own strategy, and you're taking that silly trade. Hopefully that's already shifted your perspective on those 2 points. But now let's shift to making profit. And this is a huge problem for retail traders. And later on in the video, I'm going to talk about things that can help you here as well. But let's talk about the actual profit side. So we just mentioned about the losses. And for me, I actually think that that's more important. And hopefully what I've just said there helps you understand that as well. That rather than focusing on what we're going to talk about now with the profitable side, but focusing on the losing side and stopping the losing trades long term is going to benefit you way more. Because obviously there's the compound effect on losing trades, because when you lose 1% of your account or 2% or 5%, it takes you much more to make that back. But then let's talk about compounding. Compounding, the eighth wonder of the world really. If you think about compounding and if you do these exercises that I'm talking about, you'll again shift your perspective. So I've spoken about how 1% loss a week can compound into 50% a month. But let's talk, that's negative compounding. And it's actually more when you actually break it down. But we were conservative and spoke about it in that way. But let's talk about compounding, positive compounding. So the problem with most retail traders, we live in a world where we're exposed to social media and we're exposed to trading. Forex, crypto, unfortunately has a bit of a bad rap when it comes to social media, because it's flaunted with Lamborghinis, cash, trading from a beach, that it's an easy lifestyle, when if you've been in this game for more than a few months, you'll have the realization that it's not as easy as everybody makes it look. But unfortunately, subconsciously, you're led to believe that everybody else is a multi-millionaire and it's only you that's having the issues. Well, I'm telling you that that's not true. But I'm telling you this to change your perspective when it comes to your trading. Unfortunately, not just those, there are a few scenarios, a few issues with today's society when it comes to trading. But in general, everywhere you look, anything that is sort of attributed to trading, stock market, anything, you just think a lot of money. And that's why we're all in this game really and truly, is to make a lot of money. Let's be honest. Money equals freedom. That's why we're here. But everyone's perception has been warped, and the market has a terrific way of warping your perception and reality once you're involved in the market. But before I get into that, I want to talk more about how the perception of most retail traders has been warped by the external factors first, such as social media. And the problem that plays is that when you then participate in the market and trade, you've got the totally wrong perception even before you place a trade. And you're basically going to lose before you've even placed the trade, because you've got the wrong perception of what you're expecting from the market. So that's why I laid the foundations with this, talk about, firstly, the perception needs to be that you might not trade today, you might not trade this week, you might not even trade this month. But then the perception when you sit down to actually take a trade on a day that is a trading day for you, that fits your strategy, or the day when there is volatility, or a day where the market isn't ranging, on that good day that you should be trading, most people then fail. Why is that? Because they've got the complete wrong perception of what they're expecting from the market. Most retail traders, they go into the market and are expecting to make much more than they should be on a day-to-day basis. The profits from social media, or the profit or the stigma that trading has, people just want to get very rich very quickly. And I understand that. I was there once before. We've all been there. But as you mature, and hopefully from watching this video, you'll realize that that will come. That can come. Don't get me wrong. There's a perception of making a lot of money you need to have for a longer term. But that's how you need to shift it from not right now, but to maybe it could be 5 years from now. It might be 10. You need to think like that, because there's baby steps we need to take, or you need to crawl before you can walk and before you can run. But most retail traders come into the market and they try to run from the off, and they're trying to make way too much money in the market from the very, very beginning. Even retail traders who have been trading 2-3 years, who have a strategy now, and are good traders, but their perception is warped from the market. They're still trying to make too much money each day. Or when they're in profit, they're not taking profit, because again, they're just always wanting more, and that's where greed comes in. So going back to the perception shift, we've had the negative compound. Now let's look at a positive compound. Whatever your balance might be, it could be £1,000, it could be £10,000. Do this by yourselves and let me know in the comments how this works out, because you'll be amazed. Let's say for this exercise, as an example, and if you do this with whatever your account balance is, let's start off with, let's say 100,000 or 1,000, round figures like that. If you make 1% a day, don't aim for 2, don't aim for 3, don't aim for 5, with whatever your trade is, risk reward of 5 to 1, 10 to 1. I'm not saying that's wrong, just saying for this exercise to shift your perception, because you can, once we get through this, you can take that 1 to 5% trade and that will cover you for 5 days. But let's just, for this exercise and to shift your perspective, 1% a day, relatively easy for most, I would say. You think that you can make 1% a day, probably. The problem is though, that when you're trying to make 1%, you're not trying to make 1%. Most of your trades, you're trying to make much more. And how many of you often take a trade and you go into 1% profit or more, but then that trade loses? How often does that happen? Well, let's shift the mindset. Let's shift the perception on the market. Let's say you don't need to make big trades for this exercise, for this moment. Let's say you don't need to take big trades. Let's think about 1% a day. 1% a day, if you can make 1% a day, that's 5% a week. You can make 5% a week, that's how much is that a month? That's 20% a month. If you can make 20% a month, that's 240% a year. And that's from going back down to just 1% a day. But if you can think about, you make 1%, even 0.5% now. So half the figures I just said, 0.5% a day. Can you make 0.5% a day? I'm sure you can. So 0.5% a day is how much? 2.5% a week. 2.5% a week, 2 weeks is 5%, a month is 10%. Now, 10% a month is very, very good. If you can consistently do 10% a month, you'll have, and you can show that for years, even if your account is small, you'll have people throwing money at you. If you can show that you can make 0.5% a day. But most people aren't thinking like that. They don't have that perception. They're trying to make way more. They're trying to hit jackpot trades all the time. Which again, I'll explain this in a minute, you can do. You can still have swing trades. You can have 10% trades. You can have 15, 20% trades once you get to that point and know what you're doing. And that one trade could give you your 20% for the month. But most people aren't at that stage. So let's just bring it right back down. Let's take baby steps, walking before we can run. Let's just think, I'm asking you honestly, do you think you can make 0.5% a day? I'm sure that most of you watching this are saying that you could. Usually by the time you open a trade, it moves in your direction a few pips, you're up about 0.5%, or you're up about 1% more often than not. Then it goes into break even, a bit of drawdown, back into profit. But you're sitting there with this trade, struggling to get bigger trades. Because why? Because your perception is that you need to make much more, that you need to make 5% on every trade, or you need to make 10% on every trade. But if you think about 0.5%, but most people won't do that. Why? Because they don't have the right perception to think of things long term. And also, it's not exciting enough. It's not giving people enough of a thrill. And most people can't stick to discipline. But where does the lack of discipline come from? It's because you don't have a set target or goal or the right perception long term. If you can make 0.5% a day, again, these are examples, or 1% a day, and compound that. So now with your current balance, let's say it's 1,000 or 10,000 or 100,000, do an exercise of compound 1% a day. Or let's not forget about 1%, because you might say that's not possible. It's hard to make 1% a day. Let's say 0.5% a day. Compound 0.5% a day for 3 years and see where you'll be. No matter what your starting balance is, you'll see some crazy results. And then that will shift your perspective. Because, if you're on, let's just say 100,000, 1% a day, in 3 years, you're north of 50 million. So these figures are crazy figures, but it's about shifting your perception, because most people aren't thinking 3 years ahead. They're not thinking 5 years ahead. They're not thinking most people aren't thinking. They're just turning up and trading. Haven't got any perception. They just think, I've learned how to trade. I know how to draw on whatever trading tools you use, and I'm going to find a trade each day. But that's not the case. So these things that I'm talking about, or these three things so far, are really key factors. So we've spoken about perception on trading every day or month or week, and how every day is a trading day. Then we've spoken about how often the best trade is no trade, to keep you away from the losing side, to keep you away from the minus 1% a week, which compounds to 50% a year. But we know for most retail traders, it's a lot worse than that. Then I'm trying to just broaden you don't have to do 0.5% a day. Maybe a lot of you will after this video, but I'm shifting the perspective. That's the whole point of today's video. It's just to shift your perspective, and hopefully everything I've said so far has sort of just lit a little light bulb and just made you shift your perception ever so slightly. Hopefully just to see what I'm talking about here, how 0.5% a day can make you an extremely, extremely profitable trader. By not trading every day and staying away from the losses, and understanding that not every day is a trading day, or every week is a trading week, or every month is a trading month, and that it's better to have that the best trade is no trade, how much money you can save yourself. Because it's all about making profit. It's also all about not having losses. You know, you can have all this profit, but if you've got all these losses, you're going to be at break even. So what you want to do is you want to have winning trades, but you want to have no losing trades, or as little losing trades. So your profit, the difference between profit and loss is huge. But you know, there's a lot of people who are break-even traders because they win 50% and they lose 50%. And then if they haven't got the right risk reward, you're ending up nowhere. And you're in the market for years and years and years, just going around in circles and not really getting anywhere, because you're not having the right perception. You're having all these winning trades, but you're having all these losing trades. And often it's because people don't realize that not every day is a trading day, not every week or every month. So if you can understand that not every day is a trading day, week or month, and sometimes the best trade is no trade, those losses will start coming down, 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 down. So all of a sudden, look at the difference between the two. I'll set it down here. But then, if you listen to what I said about compounding, positive compounding, then the wins start going up here. Because believe me, the magical thing about this is that when you reduce the losing trades, you become a better trader. It's like you just start winning more trades, especially when you start taking those 0.5% a day or 1% a day trades. You're not having these big trades, but every day you're getting something from the market. If it's 0.5% or if it's 1%, or even if it's 0.25%, you know, that's still great profit over a month. To see the perception shift there. So, but when you're taking something from the market, you're coming to the market confident every day. You're not coming to the market fearful because you keep having all these equal losses to your equal wins and you're just at break even all the time. When you are making profit and you're having profitable trades, you'll find that you just end up being a much better trader because you've got a better mindset, more confident. It's like whenever you've had a winning streak, or you just find that you're just finding trades everywhere, and everything you touch turns to gold. It's because you're looking at the market confidently and you're not looking at the market with a negative view, negative perception, positive perception. So hopefully so far what I've covered has helped shift your mindset a little bit. And now I just want to move on, so this video is not too long, but I can cover much more on these type of things. Let me know in the comments if you'd like more videos like this. But now I just want to move on to profit and loss and perception on profit and loss when you're actually trading. So I've discussed, you know, profit and loss in the sense of the negative compound and the positive compound. But what I want to talk about now is what I said at the start of the video of how the market, I'm sure we've all been there. I've been there a lot at the very beginning. I remember the times where somehow the market warps your sense of reality. You know, there's a lot of retail traders that start trading just to make a few extra pounds on the side. Great, that's how I think you should start while you have another job. make an extra £10 a day. Great, maybe an extra £20, £50. Everyone starts like that, but how soon do you get to the point where you're down £500, you're down £1,000 because you've blown it? But at the very beginning, when you first started trading, you were making that £10 a day, you were making that £50 a day. It was great, but then what happened? Greed kicked in, because some of the things that I just mentioned were happening. You were trading every day, every week, every month. You weren't thinking about keeping away from the losses, and you weren't thinking about at least just making smaller wins to begin with. The smaller wins will get you there. What I said earlier, learn to crawl before you can walk, before you can run. And it's all about baby steps. And no one wants to hear that, because they just want to be the best trader in the world. They want to be making loads of money, and they want to be driving a Lambo, etc., straight away, because they've got the wrong perception. But if you can change your perception to just take baby steps first and be humble yourself, and that's how you have to be in trading, you have to be humble, then you will be much more profitable. And in a couple of years, you'll be way ahead of everyone in your position, because most 95% of retail traders will never move on from the points that I've discussed. But the key part now I want to talk about is when you're actually trading, because this is a big problem. Your perception of the money on the screen when you're trading. So what I want to discuss is when you're in profit and how the market warps your sense of reality. So when you first started trading, you might have started trading to make a little bit of money on the side. And that's, like I said, what I think you should do. Then most of you have a full-time job, and if you can make enough money to subsidize your current job, great. Then if you get good enough at trading to actually make the same as what you currently make in your current job, fantastic. Why? Because that means you're doubling your salary for the year. If you're able to make the same amount from trading as you are from your current job, that's fantastic. Then comes the next stage where you might quit your job, and then you'll become a full-time trader. But along this whole journey, what often happens is the market warps your sense of reality and perception, because it's just figures on a screen. So when you are trading, you start off, and even, however long you've been trading, whether you're brand new and you say, right, I want to make £10 a day, you get to that £10, doesn't feel real, because it's not tangible, it's not in your hands, it doesn't feel real. So you go, oh, I'll try and make £20 instead, or £30, or you keep pushing it, the greed kicks in, and then you end up losing. The same thing goes on for the next stages. When if you're at a point where you're trading and you're working, let's just say you make £100 a day. If you can make anywhere between £50 and £100 a day in the market, while making, let's say, £100 a day at work, do you understand how great that is? But most people do. They have the perception at the very beginning when they start trading that if I can just make an extra £50 a day, I'll be over the moon. But then what happens? You start trading, and within a few weeks, your perception is blown out of the water. Next thing, you're trying to make £300, £400, £500 per trade. Usually because you've ended up losing loads of money, you're trying to make it back. And just the fact that your perception has now been warped, because somehow this market knows exactly how to do that. It knows how to reel you in and how to warp your sense of reality. And quite often it's due to the fact that it's all digits, it's all pixels on a screen. It does not feel real. Well, profits don't feel real. The losses can feel very real when you're on the wrong side of the market, which is where 95% of retail traders end up. But when it is in profit, when the figures are on your side, it doesn't quite feel real, does it? So you're always willing to go a little bit more greedy, push a little bit more. As I said, from 10, instead of £10 to 20, or if you're happy to make £50 a day while you're working, then you're up £50, but you say, no, I want to go to 100. Or, when you're at home, if you're a full-time trader now and you're on the verge of being a full-time trader and you're risking 1% and you want to make, let's just say, 1-2% a day, but when you're up, you're like, no, I think I can make more. Then price comes and pushes back down. But the problem is all of these different scenarios, and there's hundreds and thousands of more scenarios like that. The problem is that most retail traders end up on the losing side of the market, even after being on the winning side, Because their perception of reality is warped. And what is the perception shift I want to do here? One of the great things that I've done, and I think that if you try to practice will help you with your trading, one of the things that I've done when I was at this stage was I started to try different ideas to make things feel real, so the market couldn't warp my sense of perception or my sense of reality anymore. And I want to share some of those ideas with you today, because I believe that if you do this, it will help your trading. So, for example, many of you would have been in a situation that you were up £100 profit, but it didn't feel real and you tried to push for a bit more and you ended up losing. Or, you might be in a situation where you have a trading account. You might have £1,000 in your trading account. You might have 10,000 in your trading account, or 100,000 in your trading account, whatever it is. Even if it's even at the 100,000 stage and more, you might be at the situation where when you're in a trade, your trade is fluctuating hundreds at a time, or thousands at a time sometimes. You might go down to a smaller account size, because most retail traders will have, between 1,000 to 10,000 to 50,000. But, you could be in a trade and you could be up, let's say, £1,000 or up £100. And then you're up to £200, which might be your target, but then you want more and you try to push it a little bit more and you end up coming back down. But your P&L, your profits and loss, are fluctuating in the hundreds. You might end up losing that trade, but your profits and losses are fluctuating in hundreds or thousands. Retail traders seem to be okay with losing hundreds of pounds in a trade or thousands of pounds in their trading account. But then when you've got to go to the shop and buy something and they say, "Thank you, sir, that's £120. And you have to hand your card over and you're thinking that's expensive. But you're okay to lose hundreds of pounds at any time with your trading account. You keep blowing accounts, etc., and when you're up £100 or when you're up £1,000, you're not taking profit, you're getting greedy because you're going to go for more. The psychology kicks in, the greed, you're trying to go for more. And let's just say you're in £1,000 profit, you're trying to go for 2,000, then you end up with none. And you keep having these losses. But then when it comes to the real world and you have to go out and buy something or physically pay cash or pay on your bank card for something, you need to buy, let's say, a new pair of trainers or a new t-shirt, or you need to buy something that you need to buy groceries for the home, you need to pay bills. All these things, when it comes to paying that, it can hurt in real life. But when you're trading at the Forex or crypto markets and the money's fluctuating, you don't seem to care. Why is that? Because your perception has been warped by the market. You've been sucked into the market, you're seeing these figures fluctuating, and all the emotions that we talk in our psychology series about greed, etc., come into play, and you lose hundreds of pounds at a time, or you don't take profit because you're being greedy, and these figures are fluctuating, and 95% of retail traders end up losing. It's a known fact. But when they were up, they didn't take profit. Why? Because of greed, and because they've got the wrong perception. Whereas if they had the right perception and they were up £100, £200 and they said, "This is a lot of money," or they're up £1,000, whatever stage you are in your trading career, you know what I'm talking about, whatever relates to you. If you're up £100 at your level, that might, and even at anyone's level, £100 is a lot of money. But a lot of people won't take that because then they want to be greedy and go for the next bit of money, the next bit. Human nature always trying to go for more, because they haven't got the right perception on what they're actually aiming for each day, or the right goal. If you don't have a goal, you don't have direction. And the perception is wrong. But you're willing to lose £100 of profit, £200 of profit, but then when you have to go out in the real world, it hurts to pay for these things. Most retail traders hardly ever make a withdrawal. A lot of retail traders never make a withdrawal. They can be trading for years and they never actually make a withdrawal from the market. It never becomes real. And this is a major problem. And so then when the profits and losses, when put more money into their trading account and they're in profit or in loss, it just never feels quite real. It's never tangible because they never really take withdrawals. So they're in profit and loss. And as I said, a lot of retail traders will be happy to let their profits fluctuate rather than taking that £100 that they know they should take because they've already hit their target, but they've been more greedy. They'll end up losing that £100. But then it comes to the real world and you're suffering to pay £100 for something. Suffering, I mean, it's not nice to pay for stuff. So let's just say you've got a bill, your water, electric, gas bills, whatever they are. £100 pays for that, or whether it's £100 for your groceries is expensive. But when you're trading and the profits are there, you're not taking those profits because you're not feeling like that's real. So a few ideas and a few things that I done at that point, because I was at that stage. I was at that point that sometimes I'd be £1,000 up and then the greed would kick in and I'd want a 2,000. I'd be like, right, it's going, the profit and loss would, creep over 1,000. This is in my early days, 1 or 2 years into trading. I spoke about this in our psychology series. I'd creep over the £1,000 mark and then it's like the psychology level, you're like, right, £2,000 next. Then you'd end up with nothing. And think, well, why would I not just take that £1,000? That £1,000 pays for a hell of a lot of stuff in the real world. But this is where you need to be living all the time. You need to be living in the real world while trading at all times. And little things that I started to do to help keep things real and tangible, and little ideas that I think you can do to help, is just by, having things around you to remind you that trading is real. So for example, I used to have a £50 note underneath my trading screen. When I was at this stage, I'd have a £50 note, or I'd have some cash. I'd have a few 20s, a few 10s, a few 50s, because again, like my profit and loss would be fluctuating. But then when I'd have to pay for something in the real world, I wouldn't want to spend money. But I was okay for my profits to fluctuate in the hundreds of thousands, but then I wouldn't want to pay £50 for something. So it just didn't make sense. So what I'd have some cash underneath my screen. So then while I'm trading and I've got my cash underneath my screen, while I'm trading and I'm looking to the bottom right and I'm seeing the hundreds fluctuating, I'd see that cash in front of me and I'd be like, don't be an idiot. Like, that is real cash. That figure on the screen can be real cash in front of you. And just having that cash in front of me would make it more tangible, make me realize, don't be an idiot. Don't stop over trading. Have the right perception that you've just made a lot of money. You've just made £100 in an hour, or you've just made £1,000 in a few hours, or you've just made 5,000 in a day. Like, don't be an idiot and keep trying to chase more. Take your profit, withdraw some profits, and realize that it can be real. So that's one thing, like having some cash underneath your desk. Another one was having a bill. I spoke about it a moment ago, your electric or gas bills, things like that. Have a sort of purpose for your trading at the very beginning. Remember, this is baby steps I'm talking about and trying to shift your perspective. Rather than, your perspective being, I want to have a Lambo, I want to make millions, I want to be a millionaire by next year. That's the wrong perception. If you have that perception, it's not going to work. But if you shift your perception to, smaller goals, baby steps, like I said earlier, baby steps, crawl before you can walk, before you can run. Let's start aiming for short-term goals, ones that are actually achievable and tangible. So let's, for example, say, if I said to you watching this video, you won't have to pay your bills, any outgoings next month. You feel a sense of relief straight away. Well, why not start there? So, for example, underneath your trading screen, have last month's bill, your heating bill, your electric bill, your gas, have your grocery bill. Have that underneath in the screen underneath you. So then when you start trading, and then let's just say your grocery bill is £100, next time you take a trade and you're up a couple of £100, don't be an idiot and just say, I've just made enough to buy groceries and my bills, etc. And having these real bills and real things in front of you keep your perception in the real world and stop you from getting sucked into the warped world of Forex trading and crypto trading when you're only staring at a screen. These things will remind you that actually this money can be converted into these things and start to pay for them. Like I said earlier, most retail traders never make a withdrawal. And it's very, very important that you do that. Even if it's £50, even if it's £100, it's very, very important, because the perception, again, with trading is, it cannot feel real. But then when you make a withdrawal and withdraw it into your account and you actually take that money out, or you pay for something and then you actually have an item in your house, then that feels real. Now, I remember I actually at one point, I think it was just, again, an item to have in front of me. I think it was a pair of trainers. Again, I think one of my first withdrawals, I took it out, I bought a pair of trainers, 100 to 150 pounds or something. But I used to keep that box and the trainers there at my screen, so that next time I was up 100, 200 pounds, I'd be like, stop chasing the market. I can see in front of me, and under the screen was very, very important, or on your desk is very, very important, because then it's in your line of sight. It's in your eyesight. So then while you're getting warped into this world of the trading world, where you're staring at your screen all day and the profits are fluctuating, and it gets your sense of perception and reality gets warped, having that in your line of sight will remind you, no, remember, you can convert this money, these digits on the screen, you can convert them into real life assets, or not assets, but real life items, and eventually assets later on when you start pulling stuff out and you can buy assets. But that is some of the tips and tricks that I done at the very beginning. But going back to what I said about having a goal, we all have goals of percentage that we want to hit, like a 1-to-1 risk reward, 1-to-2 risk reward, and there's percentage goals there. But on top of that, sometimes talking about percentages can often, again, just keep you away from the real world, and you're just talking about percentages, you talk about figures, and it's just all in your mind on a screen, nothing's real. But sometimes have a goal, start with baby steps. Yes, we can all want to have a Lamborghini. We can all want to be a millionaire. Of course, you need to have that. That's why, you don't have to have a Lambo, but we all want to be millionaires. That's why we're all into trading. We all want to make money, simple as that. Everyone that gets into trading wants to make money. And you need to have that perception. You need to have that end goal. But have that as a goal, but have the perception that that's going to be further down the line. It's not going to be straight away. But how do you get somewhere? You have to start, like I said earlier, you need to start slow. You're not just going to get from point A to point Z straight away. You have to go slowly through. You have to take babies, you have to crawl to begin with and have that perception. If you're a retail trader, it doesn't matter how long you've been in the market. It takes some people 10 years to become a profitable trader. Some people 5 years, some people 3. But it's never going to be overnight. So you have to have the perception that, there's nothing wrong with it taking 5 years. It might take 5 years, have that perception. But start crawling. Humble yourself as a trader. Realize that you have to crawl before you can walk and before you can run. And the way to do that is to have smaller goals. Have the millionaire mindset, of course. I want you to have that. That's the correct perception to have. But then, don't have big goals that are unattainable. You have to have smaller goals in between to get to that longer goal. And the way to do that is by setting yourself smaller goals. Goals are basically checkpoints or destinations. If you don't have a destination or a goal, you're going nowhere. You're aimlessly just going nowhere. So if you don't have a goal each day, or you don't have a destination of like an amount of money, that's what I mean by this destination, then you're not really going anywhere. And that's why a lot of retail traders end up going around in circles, because rather than saying, most people again talk about 1% a day or however much they want to make a month, but it's all figures. But if you can start thinking about real world things, so for example, and I think that this will help if you do this at the crawling stage. Look at your last month's bill. Let's say it's £150. Say, okay, my goal today or this week, I don't know where you are in your trading journey, how much you make a day, or how much you can think you can make a day by making 1% a day or 0.5% a day. But get your last month's bill for the groceries or whatever the bills are, whatever things you have, your outgoings, your gym membership, whatever your outgoings are every month that add up, your phone bill, everything. Get those bills and say, right, today I want to cover this bill, and change your perception. Stop thinking too far ahead and just, trade to pay for your current outgoings. Have these smaller goals. And then you, without realizing it, you'll realize that, hold on, you're taking a trade, you're up £1,500. Okay, that's that bill sorted. That's that outgoing. And then by doing that and taking smaller profits, you'll realize at the end of the month, you'll be like, hold on, I think that this is what will happen because it's what happened to me. I promise you, it likely will. You'll say, well, hold on, I've just paid all my outgoings last month because I was taking profit. Whereas before, I didn't take profit and I'd be in profit and then I go back to a loss. And I know this is a fact because 95% of retail traders lose. So what have you got to lose by doing something that I'm saying? So let's just say last month's grocery bill is £400 or whatever it is, or your phone bill or your gym membership. Each day, or be like, right, today, that's my goal, or not today, or this week is my goal is to cover that bill, cover this, cover that. These little small things that add up, but then you'll realize that you're making a lot more profit by having these shorter goals than constantly having the wrong perception that you're going to make hundreds and thousands every day and always aiming high. Because while you're aiming high, you're missing out and you're never going to get there. It's like climbing a ladder. You have to go step by step by step, and you have to change your perception. These things I'm saying, you might not have heard these before. Complete different way to look at things. But I'm giving ideas and examples which are basically saying to just start small, to crawl, to take the baby steps before you can walk and before you can run. Everything else that we all want from trading can and will be achieved, but it's done by starting small and having that perception shift. But going back to the start of this video and what I mentioned about, not every day is a trading day, concentrating on not having the unnecessary losses. Losses are part of the game. You're always going to have losses. Everyone has losses. I'm talking about those stupid, unnecessary losses that you shouldn't take, and you take them knowing it's a bit of a gamble. Now, if you can shift your perception to realize that just one of those stupid, unnecessary trades a week is 50% a year, let alone one of those trades a day. Imagine how much that is. But 1%, one stupid trade a week can cost you 50% a year. So hopefully that will shift your perception. Then go to the profitable side with the positive compounding. And like I said, and what I said in my examples of paying for bills and paying for, real life things and making the market real, if you take small profits every day, shifting your perception of needing to make huge amounts of money every single day. If you start off with not even 1% a day, but 0.5% a day, that's 2.5% a week, that's 10% a month, that's 120% a year. But obviously, let's just say 100% a year because not every day is a trading day. But if you do that, you will be in the top 5% of traders in the world if you just make 0.5% a day. 0.25% a day is still giving you 5% a month, which is over 50% a year. So imagine if you just make 0.25% a day, you can make 50% profit this year. I'm going to leave it at that, and hopefully that shifts your perception on the market. I really hope it has. I really think that if you take this on board, it can help, and hopefully it has. But I think that's really powerful, and I think the examples I've given there are really powerful. I hope that they've come across and I've explained them as they are in my head. I hope I've explained them in the best way possible, and I hope you take them all on board. Any questions, please ask away in the comment section or reach out on Instagram, etc. Happy to speak with you guys. But the reason we do these videos is because we want to help. We want you to be profitable. And I really believe, I wouldn't do this video if I didn't believe it. And I really believe that if you just write down, take on board, and do the things I've said in this video, I really believe 100% that it will make you a better trader. And if you're not profitable, it will make you profitable. If you stick to these things, write them down, take action, do the things I say, have the little things underneath your screen, whatever is relatable to you. Just think about the next thing you want to buy when you're trading. Whatever that is, whatever you need to go and buy that day, whether it's you need to go out and buy lunch or dinner, or you need to buy some new clothes for something, or you need to buy something for your children or something for your wife or your husband, whatever it is, that next item that you need to buy, just think about what that is. And then when you're trading, think about that figure, something real in the world, rather than just letting these figures fluctuate and never being real and never actually come into fruition, because most retail traders just end up losing any profit that they had. So I leave it there. Hopefully those figures and examples on compounding will help you. Until next time, look forward to seeing you on the next video. Thank you very much, guys. Speak to you soon.